What's up, guys? On this episode of Dollars with Decker, we sit down with Hannah Hammond, a self-made entrepreneur whose journey from an extremely challenging childhood became an extraordinary success, and it is so inspiring and empowering. She has founded multiple successful ventures, including a national hard money lending firm, a real estate brokerage, and 3 construction companies and a project management company, all before the age of 28. She became a multi-millionaire by the time she was 25, serving as both a CEO for both her hard money lending company and her real estate brokerages. Now, she has her sights set high because she's actively working to grow that hard money lending company Cash Capital to over $1 billion as a fund. In this episode, it's our first one with the female. She really reveals her remarkable story, gives us that feminine approach to how you can grow your business as a successful woman in a man's world. So let's learn what she has to say.
Well, I appreciate you joining me today, Hannah. I figured we need to get some girl energy up in here. So you're our first female guest. And I think one of the things that kind of stood out, to me personally about you is most people in the world of real estate, which it can be a female dominated in terms of real estate like brokerages, but you really kind of went into the hard money space, the commercial space. And I know kind of growing up, all the commercial brokers were like the old guys and doing that, So when you went into that kind of space, was it hard to kind of get accepted? Because you've done fantastically well. I mean, you're a young female. Like, how was that? How were you kind of received initially into that kind of space?
Oh, well, thank you for having me here. I'm excited to be here. And it definitely was difficult. I mean, everything in my life has been difficult. That's what I go for. I'm like, oh, that's the hardest thing. Let's do that. But fortunately, I was 18 years old. I got my real estate license, signed up for KW, residential brokerage, held an open house in my neighborhood in the middle of summer. One person showed up at the end of it, and it was the neighbor, and he listed $1 million commercial property with me.
Shoot.
So I was like, oh, this is fun. I love this. This is great. I sold it in 2 weeks.
Wow.
It was a long closing, rezoning, and ended up being a lot of learning and a lot of knowledge, a big nightmare, but great lessons. But that was my foot in the door right away and gave me the confidence to just go in on commercial. However, right after that, he did a 1031 exchange into a luxury residential home in Troon, which was also same price point, 1.1 million. And that was also great too. I was like, oh, I like this. And that he had me help him set that up as a luxury Airbnb. So I got into the furnished rental game and the commercial game back at 18 years old, which was 10 years ago. Wow. So I just liked investment sales, whether it's residential, commercial, investment sales, and brokerages don't let you do residential or commercial. I ended up going to a brokerage, and it was my home group, and reaching out to commercial brokers with a email signature that says my home group is crickets. So I was like, all right, I got to get out of here. I need to open a brokerage, and I need to have it look like a commercial brokerage, be a commercial brokerage, and actually be able to have some respect from these guys in order to break into the industry.
Yeah, and I think one of the things I just learned from you, I think it's very important people that are listening to hear is you obviously listed a commercial property, which you obviously probably had no training on commercial listing. And then when he went to sell, you 1031, which you obviously hadn't done a bunch of 1031s. And most people, when they haven't done something before, they end up just saying no. So I think one of the key things that really people need to understand is you said yes, and then I'm going to figure it out along the way, because you learned if you could follow that client along in his real estate journey, it was an annuity for you rather than just being that. So when somebody, provides you with something that you haven't ever done before, like rezoning, or kind of walk people through on how did you do your research? Did you go to people that had experience in doing that? Because I think that's where a lot of people just say, oh, I've never done this. I can't do that. But you didn't, and you were 18, 19 years old or whatever at the time.
Yeah, I had just turned 18, and I had no idea what I was doing. And in fact, the broker told me I couldn't do it. They told me I had to refer it out, and that they didn't do commercial. I wasn't allowed to do commercial. I didn't know what I was doing. It wasn't worth a penny over $400,000. And I don't listen to what anyone tells me, clearly. So I took the listing. I listed it for 1.1 million, had it under contract in 2 weeks. Researched online everything I could about commercial. I was fully transparent with my client. That's one thing. I think people try to bullshit. and pretend like they know if they don't know. And I was transparent. I said, I just got my license 2 days ago when I met him. I was like, I've never done a deal. I just finished engineering school from ASU. But let me tell you, like, no one will work for you harder than I will work for you. And you are my only client. And I can assure you that I will sell this property for the dollar amount that you want to sell it for. And you will be happier than you've ever been in your life. So I was just transparent, and I worked really hard for him. And he actually still employs my brother to this day, 10 years later. My brother's going to take over his tree trimming business.
Wow.
But yeah, so I think that's it. Just be transparent. Fail forward. My broker didn't know what he was doing either, and ended up making a $10,000 mistake on the contract. And so I ended up doing a free deal for my client later on. But still, it's just like, take the risk. Like, the only way to learn is to do it.
Yeah. And I think from somebody, I know you now are at the point where you probably mentor other people on that. And I always really want to help somebody out. I would much rather have somebody, if I ask them, hey, can you do this? I would much rather say, hey, you know what? I've never done that before, but I'll research it, and I'm going to research it really, really, really hard. And I'm willing to work super hard for you. And if you'll give me the chance, I'll show you. I really appreciate that, because I put myself back into that person's shoes, and nobody gave me a chance. And so you get more grace from that person by being that transparent. So I know one of the questions that I get asked, I'm sure a lot of our viewers have, is, I got $100,000, let's just say, and I want to make an investment. People either say, okay, I can look for $500,000 properties, put 20% down and control that asset, make my appreciation, write off my depreciation, make money over time, but they don't think about all the negative things. Tenant turnover, repairs on the property. You get a bad tenant and you're trying to fight to get them out. And so I know with one of the things you're doing with raising with your fund for your debt fund, did you kind of predict or see from your experience some of those same issues? And for that person wanting to invest $100,000, kind of tell me why you think you'd be better off investing $100,000 into a debt fund potentially versus $100,000 buying a $500,000 residential home.
Yeah, and they both have their pros and cons, and it really depends on where you're at in your life and where you're at with your time and what you enjoy, too. Because I know some people, like my best friend, she's got 18 flips going at any given time, and she loves it. She loves the management. She loves the design. She loves all of it, and she has a really good machine going. That's my worst nightmare.
Yeah, mine too.
I can't stand it. I prefer to be the bank at this point. But if you really have time and you choose to have real estate as your business, like real estate investing, and you want to be a property manager, even if you have property managers, you still got to manage the managers, and you want to deal with, like Zach Keeps, he loves it. He likes to do it. He's been doing it. He's got 300 houses. He manages them himself, and that's his thing. And if that's your business and that's your job and that's your thing, then that could make sense, because you get to do the full depreciation, which we'll get into politics a little bit later. That may not be as great of a benefit. It already is down to 60%, and Lord willing.
We stay close.
But anyway, versus investing into a fund or somewhere else where you may not get the full depreciation benefit. You may be able to have more control. So you have more control over your exit. You have more control over your rents. You have more control over the project. So there's a lot of benefits. And with my own deals, it's been great to be able to really rapidly force the appreciation as I was going from zero to, getting into the millions as I was getting started. But now that I have enough cash and liquidity, and time is my greatest resource now, it makes more sense to find who is the strategic sweat labor partners who really have the experience, have access to deals, and I can just take a smaller piece of a bigger pie and put my investments in a bunch of other areas so I can free up my time to do what I do best and continue to make money that way. So I think it really depends on where you're at and what you're doing with where you're at in your life. If you're just getting started, I think buying fix and flips or rentals and things like that is a great plan. But once you have some money to work with, it may be best to partner with other funds or other partners.
Yeah, and I think a lot of people don't know. I mean, like I have a self-directed IRA, right? And so in my self-directed IRA, which basically just allows me to, choose the investments that it's obviously going to go into. One of the things with, and this isn't a pitch for them because I don't get paid by them, but Horizon is who I use. And one of the things within my self-directed IRA is I have the ability of actually lending out my money within that self-directed IRA. And so for me, just to your point, and I think a lot of our viewers need to hear this, is being a real estate investor does not mean you have to buy properties. That is one facet of it. Just like, you don't have to be a house flipper. You don't have to be a wholesaler. But the other thing of investing in real estate, which for me, like you said, and I'm sure a lot of our people on here, that you're a W-2 employee, you're an engineer, you're a doctor, you're a mom working a full-time job plus taking care of your 3 kids. Trust me, it is not worth it on the weekends to be going and checking on your flips, checking on your tenants, paying 10% to a property manager, when in the actuality is you can invest in a debt fund or lend out your own money. And why don't you kind of tell people, like, for you, for an example, if you lent out your own money, and we took that example of $100,000 and you lent out $100,000, just using it as an easy number, what type of interest rate returns can people expect? And I know there's, besides just the interest you collect, there's some other fees and things that are standard in the industry too, a lot of times.
Yeah, and that's exactly how I got into private lending, because growing up and when I didn't have a lot of money, I didn't know that I could ever be a lender.
Yeah.
I thought that was just a government thing and that it's a bank thing. Like, I didn't think people were banks, right? And so I thought I had to do the sweat labor and do the fix and flip and do that stuff. There's no books on being a private lender, right? And so the only reason I found out about it is because I heard about private lenders because I couldn't get regular loans because I was a broke 18-year-old kid trying to do fix and flips.
Yeah.
And naturally I found out about them, and as time went on, I was like, okay, well, they always make money.
Yeah.
I don't always make money.
Yeah.
Like, I'm grinding over here, and I'm working months and months and months. I'm usually making money, but I'm like so tired, and this is a pain in the ass. And it's like from finding the deal, to closing the deal, to doing the project, selling the deal, to all the things, and then trying to refinance if you're keeping it. The lender was just like, here's your money. And then you got this, keep on going. And they're always in a good position. So that's when I realized, okay, I want to get on that side of the coin too. I still want to invest in real estate for the depreciation and the tax benefits. But for the high interest and the high income, I want to be a lender. And as far as what rates are right now in the private money space, it's about 12 and 2. So what that means is 12% interest per year. Usually they're interest-only payments per month, so 1% interest per month, and generally about 2 points up front. Yeah. And that can vary depending on loan size, asset class, market that you're in, and then as the interest rates shift a little bit, that can change as well.
Yeah, and I think that's like a lot of times I know I have several hundred members in my different wealth investing groups. And one of the things I always ask somebody is, okay, are you going after this for an income play? You want cash flow to supplement something? Or are you looking at this to eventually replace your current job, right? And so if you want to do something to replace your current job, get out of your 9-to-5, real estate investing on flipping houses, building long-term rentals, all those things are great. And you'll just know you're going to work 90 hours a week until eventually you can get rid of your 9-to-5. But for the person that's like, hey, I want to get something better than the random checking account balance I'm getting or my high yield savings, and I want income. And if you think of it this way, $500,000 house, you put $100,000 down. We all know at today's interest rates, it is almost impossible to cash flow without doing a sweat equity build or getting a random. But the average regular person finding a house on Zillow and putting 20% down, they're not going to cash flow on that property. You'll get your random one. But here, that same $100,000, they're going to make $1,000 of cash flow per month, not have to worry about anything at all going wrong with the property. And then on the points, if they're lending out their own money, they're going ahead and they're making another $2,000 up front, and then they get to do that again. So for the person looking for cash flow without the headaches because they got a good job, they're just looking to supplement it. I love that you're doing a debt fund, because that is, I feel like, the one part about real estate, and you nailed it, is people don't think they can be the bank, and once they realize that, they always win. I mean, I guarantee you've probably got your butt kicked on a flip. I know I have. I've got my butt kicked on a flip. My private money lender, he made the exact same.
Yep, exactly.
Every single time. And he's in a good position because most of the time, by the time the house is done, he's at such a lower loan to value because the value's gone up that if I default, he can take the whole house, from me.
Yeah. Well, and I mean, they want you to fail because they make more money.
Yeah.
I mean, if they get the house back, they make 25, 30% plus default fees and penalties and all that stuff. And I mean, there's how you find your deals.
Yeah.
Like you add to your real estate portfolio, just
Yeah.
have default loans. I mean, that's why a lot of lenders are truly asset based. They don't. You have a heartbeat, great. Just show me the property address, and I'll tell you how much we'll lend on it.
And why don't you tell people about that? Because I hear this a lot. Is people don't understand. Okay, yes, if you're going to buy a residential property, right? Let's just say, and you're going to buy your primary home, they're going to look at how much money you got to make, what your credit score is, because you are the business. You living in that home as your primary residence, you are the business that's going to pay for that asset. However, when you're looking at buying investment properties, why don't you kind of like, so say somebody comes to you and says, hey, I want to buy this $300,000 home. Like, what do you, like, what do they have to do? Because I think people realize like, oh, I can't buy that because I don't make enough money on paper to cover this one and this one. Why don't you kind of walk people through that? Because I think it's a big barrier for a lot of people not investing in real estate.
Yeah. So for me personally right now, because I've been lending my own capital, obviously once I have a fund, and it can be different. And when you're working with a private money lender or a hard money lender, there's so many different situations and qualifications, because you could work with a big company like Kiave, who is pretty much like a bank because they're selling all their loans. So they're going to do a credit pull. They're going to sometimes ask for bank statements. They're going to be a little bit longer closed. They're going to require an appraisal, and that's a little bit more of a bank process. Or you could go to a private investor like myself, and I'm not even going to ask for anything. I don't even need a driver's license, honestly. I just need a purchase contract and a title report, and put my name on the insurance for the property, because it's truly asset based. And if you don't pay, great, I'll take the asset. And so it really just depends on the lender, on what the process is. That, like I just explained, is as simple as it's going to get. And I mean, I funded on loans in 48 hours.
Wow.
I just need the purchase contract and the title report from the title company. And but something like Kiavi or one of those big companies, you're probably going to get a little bit lower rate because they're big institutional funds. They've got hundreds of millions of dollars, and they're keeping a smaller spread. But they're going to be a longer process. And so the nice thing with me is, with what I've been doing, or any other lender that may be a higher rate but they're really quick, is you can take advantage of really good deals. Because if you find a really good opportunity, you don't have 30 days and have to get an appraisal and an inspection and all these things to save a few points on the rate. You want like one of those more local or
and it's a short-term loan. I mean, most of the term, I'm sure you're probably 6 months to 18 months. Is that most of the stuff you're typically doing?
Usually exactly, just depending. Residential, I mean, anywhere from 3 to 6 to 12 months. If it's construction, maybe a little bit longer. Commercial, 12 to 24 months.
Yeah, and what's nice for those of you guys that are listening to this, obviously, like, I've used private money before when I've had all my own capital out, and I'll buy it. I'll take 12% on interest rate, because many times the properties I'm buying could never pass bank financing to begin with. Go in, do the rehab work. Some private money lenders will even fund a portion of or all of the rehab work. Then I go in, I get it leased up, and then I go get my conventional loan. And I've built in equity. I've stolen the property because I was able to close in 72 hours when everybody else was asking for 30 days and inspections and all these things. And a lot of times when you're finding good properties, there's a desperate situation that the seller is in, right? And you're not saying to take advantage of them, but how you're helping them out is speed to cash, and that's what private money does. Now, one of the questions, I know it's a hot topic, and I'm very vocal about this. I'm sure you are, and anybody that has any type of money in real estate or stock should be. What do you think, and this is just a prediction, what do you think the difference is going to be, let's say a year from now? Let's say, what is the real estate market and the economy going to look like around real estate if Kamala gets elected versus Trump? Just like your opinion. What do you think?
I think we're all screwed. Regardless of who they are as people, that's not what we're talking about. But as far as real estate goes, real estate policies, I mean, even cost segregation is huge. Like, the amount of impact to our take-home income, which doesn't only affect our pockets, it affects our employees and the jobs and the whole economy, is so severely affected by taking away cost segregation that alone is such a detrimental effect to the economy. And just,
why don't you explain cost seg just to people? I mean, some people may know it, but it's my favorite strategy in all of real estate. I mean, half of the real estate I buy is just for the cost seg.
Exactly.
You know?
Same. Yeah. So cost segregation, if you're a real estate professional, which there's tax law, qualifications on how to be a real estate professional. But basically, if the majority of your 40 hours a week is spent in real estate activities, like whether you manage Airbnbs or you're a real estate agent or you're an investor or anything like that, then you can classify as a real estate professional in your taxes, and you can do something called cost segregation, which basically accelerates the depreciation of the asset into 1 year. And what that does is it allows you to take that accelerated depreciation, which usually it changes, but usually for me, it's been between 20 to 30% of the asset value. And I can write that off against all of my income, not just my rental income, all of my income. So let's say I make $1 million in a year, and fourth quarter, I tell on my books, I'm like, okay, it looks like I'm going to make about $1 million this year. I could go buy a, few $1 million property, or, let's say I buy a $4 million property. I put $800,000 down. Well, that pretty much just wiped out all my taxes completely if I can use 100% of the cost segregation. However, since the Democratic Party's been in office, that's been phasing out. So this year we're at 60%. So instead of $800 to $1 million of depreciation I would now get 60% of that, which causes me to pay more taxes. And then next year it would be 40%, and then 20%, and then zero. Versus if the Republican Party gets elected, that will be reinstated most likely to 100%, which is super, super important. And then also just the understanding of the real estate market and interest rates, and keeping rates low, keeping the economy is
It's a house of
I
cards,
could go
but
on
still,
and on. Yeah. But it's really important, and it's a really, really big thing. And
I think a lot of people don't realize that. I know, like, I was having a conversation with a buddy of mine, and he was like, but Trump did this, Trump did that. And I was like, here's the thing is, I don't particularly like either individual personally.
Right.
But here's what I look at is, at the end of the day, my job is to provide for my family and my employees. That is what I have to do. That is my responsibility. Now, I know most of people think that, Brian's just trying to not pay all this money in taxes so he can go out and buy a bunch of Ferraris and Lamborghinis. No, here's the fact, and to your exact point. Let's say somebody's, in this case, he was a doctor, and doctors don't make as much money as people think. He makes like $300,000 a year as an ER doctor, believe it or not. And so I was talking to him, I was like, how much do you pay in taxes per year? And he looked at it and he was like, about $100,000 to $120,000 a year between Fed taxes and state taxes is what he pays. And I said, okay, I want you to understand something. So let's say you go out and you buy an Airbnb, right? And because it's an Airbnb, it's a short-term rental, you don't have to worry about the real estate professional qualification, right? So you, instead of paying $120,000 to the IRS, what if I told you, go out there and take $100,000 of that and buy a $500,000 Airbnb? Okay, you just bought an asset that you have value in that will go up, and instead of pissing all that tax money away to the Fed and state, who are going to pay for, inmates to have transgender surgeries and to teach our 6-year-olds things they should never know until they're 25 in school, you do that. Now that $500,000 property that you just bought, doing a cost seg, exactly what you mentioned, let's say it's 30%. That's $150,000 of that depreciation. Now your $300,000 W-2. Now you get to deduct $150,000. That means you're only paying taxes on $150,000, which takes you down to tax bracket. So instead of that $150,000, we looked at it and it was going to be like $55,000 he was going to owe in Fed and state. So I said, okay, look at this. You went from 120 to 55. You bought an asset that's going to go up in value. You have a loan amount, so you have equity in that asset. Would you not say that is something that is valuable, that's going to keep you more money in your bank? You're going to spend more money in the economy. You're going to donate more to charity. You're going to have all this leftover liquidity to stimulate the economy. Would you not agree that that is a good thing? And he said, yeah, it's a great thing. I go, just so you know, this is being cut from 100 to 80 to 60 to 40
to 20. Now, I don't know about you, but you're not a quadrillionaire that's going out and buying a new Ferrari. There are millions of you out there, and there is 1,000 billionaires out there, but yet they're pitching this as something that is only for the billionaires, when in the reality is it's going to help so many more other people, which is why I just like you, I just don't understand how people couldn't see that.
Right,
You know?
exactly. And I think the whole thing is it's just shifting everything to communism.
Yeah, exactly.
And I believe in capitalism, and we live in a country where we have the opportunity to work for the life that we want. We have that opportunity, and I think if we're going to give every dollar we work for to the government so they can control our life that we worked for, I think that sounds like slavery.
Yeah.
And that doesn't sound like a life that I would ever want to live in. And I would rather be able to have control over the dollars that I earn, so I can help support the people that I hire and the people in the world, because that's what matters. Because I mean, look at government spending; it's absolutely ridiculous, and it's just. I mean, you see the projects that they're spending money on. It's like freaking. There's all of our hard work, all of our hard-earned money going out the window.
Study,
yeah,
you know,
I know, right?
Stuff.
Yeah,
yeah. And so, tell me what your thoughts are on this. So, if we know, let's say, Democratic Party gets into office, and let's say that's going to reduce the amount of cost segregation, and it potentially would increase the capital gains tax on people as well. Being somebody that is a real estate investor and works with a lot of real estate agents, would you say that you would have a number of your investors that would detour them or detract them from buying investment properties?
Oh, for sure.
Yeah.
I mean, that's a huge reason why people buy investment property. I mean, that's a big reason. That's
Me
like
too.
the biggest reason I buy real estate is because of the cost segregation.
Yep.
Yeah, it's the depreciation is everything.
Yeah. And so my thought was, if you have less people buying something, what happens to the value of that something?
Well, it drops because the demand drops and the supply goes up. And then also, not only does it affect the real estate market, it'll have a crippling effect on every other thing in the economy, because now we don't need debt.
Yep.
Right? And then, I mean, like, everything runs on real estate.
Yeah, I mean, you think about the home as an ecosystem, right? You think about what comes from a home. And, you know, if you're listening to this, see if you have one of these jobs, right? In homes, every time there's a home sale, you have a buyer's agent, a seller's agent, you have a title company, you have an escrow company, you have a new insurance quote, you have a appraiser, you have a home inspector, you have a people getting the house clean from a house cleaner. Then you have a moving company that gets involved from moving that additional person. Then you also have new deposits coming in from going a new person, opening up all their utilities. You many times have people that want to make changes to that home. So they're hiring a contractor, they're hiring an interior designer, they're buying new furniture for their new house. They're going to the grocery store and restocking their fridge because they threw all their old stuff out. I mean, you think about it. And if your job is in any way affected to just some of those things, like, you wonder why people can still vote that way.
Yeah, and then also it wouldn't incentivize people to continue to improve real estate, and because all these old buildings, they need to be improved.
That's
and
a
if there's
great
no
point.
incentive to improve it, the country's not going to be great.
Yeah.
It's going to be horrible. Like, it's going to
Yeah.
be ugly.
That's
and
a
old
brilliant
buildings.
point. So for anybody in construction listening to this, like, what she just said was, one of the big benefits of cost segregation is if you're going to go in and, like, for an example, I bought an Airbnb in Tennessee, and it was a new building or a new thing, but I went in and turned it into we call it like a babe cave. So every room's like very like Louis Vuitton that has all this cool stuff for bachelorette parties when they go. We spent a couple $100,000 on doing it. The only reason why I spent that couple $100,000 and could justify it was I knew I could cost seg that additional amount. If I couldn't have cost segged that additional amount, maybe I'm spending $25,000 just to put new paint and put new carpet and some basic things in. So with that cost segregation, people are knowing, hey, I'm going to get 40 or 50% of every dollar I spend back in tax savings. That would have a disastrous result on the construction industry. That was a brilliant, brilliant point. You know, and I don't think people think like that.
Yeah, and there's the quality of life of people. Like, we don't want to be living in dilapidated buildings,
Yeah.
and the contractors, the investors need to go in to buy them, so they value add, they renovate, they rebuild, they build new, and all of those aspects. And then also when there's tax savings. It doesn't mean that money just gets hoarded. No. That money goes back into the economy to spur the economy and continue to grow the economy. Yep. And it's, it'll be very detrimental, and I'm pretty afraid of that happening, honestly.
Yeah, me too.
Keeps me up at night.
And I think, I mean, I don't know if you have kids or not. I mean, I have 2 kids, and I think every parent, all you ever really need to look at is say, okay, 6 years ago, did I feel safer in the world my kids lived than I do today? That's all you need to know. Like, I don't care if it's Democratic or Republican. I could care less about the party title or the person. What I look at is, just like a CEO of a company, nobody invests in a company just because of the CEO is. No, it's their team. And so when I look at it is, I look at the presidency of saying, okay, I got Trump as CEO or Kamala as CEO. Okay, I really don't like either one of them. Like, I mean, one's better than the other in my opinion, but they're both kind of wild horses and a little weird. Mm-hmm. But who is the team that they're assembling to really run this country? Do I want Walz, who was responsible for probably the worst city in America outside of San Francisco? Or do I want J.D. Vance, who came from nothing and is literally on the board of like 6 publicly traded companies and is one of the most brilliant people out there? Do I want random celebrities that are probably on Diddy's list supporting Kamala? Or do I want Elon Musk, this world's version of Einstein or Tesla, on what he's done in this world? Like, and I mean, when you look at something and you analyze that, am I off in thinking of that analyzation?
Oh no, I'm with you 100%. Yeah. And I was at the RFK Jr. rally, Make America Healthy Again, and he was formerly a Democrat.
Yeah.
And it's just, like he said, it's just not what it used to be, and it's not good what's happening. And even down to the food, like we're the fattest country, we're the sickest country, we're the most depressed country, we're the most suicidal country. Like, it's not good, and we should be the best country.
Yeah.
We have no reason not to be the best country, and it's really unfortunate out there. And you're not. Trump's batshit crazy. We all know so many people are batshit crazy. Yeah. Like, we're not perfect human beings, and you're not voting for Trump. You're voting for the 5,000 people that are in, bringing in policy that is ultimately going to make America safer, healthier, wealthier, happier. Like, that's ultimately driving humanity forward in the right direction. It's not about the either person at all. They don't make the decisions, really. Like, it's the whole team behind them. And it's like, what policies are going to be put in place that are going to be best for, overall be best, because there's some policies that I'm sure you like the other way, or I like the other way, or whatever, but it's overall what's going to be best for the overall economy and for the overall health, not just money speaking, but health of the people in America.
Now, one of the things kind of finishing it up is, I think a lot of people, I know, at least in my opinion, they see something and they're like, oh, well, they can do that because they knew this person, or they could do that because they had money on here. You honestly were an 18-year-old girl, like, growing up, and like you were saying, kind of the not the Scottsdale PV where you live today, but on the wrong side of the train tracks. What ever gave you, because truthfully, at 18, 19, 20, 21, I did not have the confidence to bite things off. Like, if somebody was starting today and they're in that point where they just feel like, you know what, that's great that they do all that, but like, where do I start? Like, how do I get that confidence in myself? Like, what were some of the things that you did to give yourself the confidence of knowing you could take on these tasks as rather than being partying in Old Town with everybody else? Like, what was that? Like, what was your habit like, routine like, or where'd you draw your information from? Like, what was that?
Yeah, so my dad worked and still works at a pawn shop in the ghetto. Mm-hmm. We did not have a lot of money, and I did not have a lot of guidance or mentorship or entrepreneurs, anything like that. And so it's another reason why I love capitalism is because I wasn't handed anything, and I knew that nobody was coming to save me, and I didn't want anybody to come to save me. I wanted freedom. And in order to have freedom, I had to take control of the reins, and I had to go teach myself the skills that I needed to learn to be able to have freedom.
Yeah.
Financially first, so I could have the needs provided to take care of myself, and then mentally, spiritually, physically, and all of the other things that come with it after your finances take care of. So where I started, I read Rich Dad Poor Dad by Robert Kiyosaki.
Yep.
And that taught me financial intelligence. Yep. What are assets? What are liabilities? What is good debt? What is bad debt? The school systems don't teach you anything, really. YouTube and books and all of that is a million times better. I wish I did go to college and I just would have studied the internet, honestly, or going to seminars and conferences and things like that. But yeah, that is super important. I would definitely read that book and just understand and get a good grasp on financial intelligence and the difference between assets and liabilities and the importance of investing in assets. And the second thing is the two most important skills you can possibly have, in my opinion. Number one is sales.
Yeah.
Like if you don't know where to start and you have no money, learn to sell.
Yeah.
Anything. Sell door-to-door sales, sell printers, solar, mattresses, real estate, like anything. That's why I chose real estate, because I was like, I went and got an engineering job after years of college and got offered, about 6 figures, which was great. But I looked at my first paycheck and I freaking cried because half of it was gone.
Yep.
And you get a 3% annual increase. I was like, I'm never getting anywhere. And this is the best job I could possibly get.
Yeah.
And, yet I made that in like 4 hours selling real estate, so you could sell anything. And sales, people skills, like communication, people skills, and being able to public speak would come next, and just speaking and presenting and communicating. But that applies to everything, I think, is just being able to sell and be good with people, and then having a good understanding of finances so you don't blow your money.
Yeah.
You have to invest it.
Yeah. No, and I think you nailed it. I think everybody thinks to make a bunch of money, you have to invent something or create something. I made all my money by literally selling a product initially that every other person in the world had access to, a mortgage rate, which we did not dictate what it was. I just figured out a better way to sell it by learning those communication skills. So you don't have to be a genius where you got to have the best product to do something. You could have a boring product, but if you have the confidence based on a financial knowledge, and you learn how to communicate with people, and you learn how to build rapport with people, that is a skill set that will take you so far in life. Because we know, I'm sure at your real estate office, your best salesperson was guarantee you not the one with the most impressive resume.
No.
Yeah.
No.
Yeah.
Yeah, no, it's just the person, like, be a good person. Be someone that is genuinely interested in other people.
Yeah.
And just someone that you're trustworthy and that you can get along. You don't necessarily have to be super outgoing. You don't necessarily have to be super good looking. I mean, like, all those things aren't, people have this stigma of what salespeople look like. But yeah, you got to take care of yourself.
Yeah.
Like, don't be a
sloppy
ugly
fat person.
slob. Yeah, thank you. Like,
exactly.
I wasn't just born pretty. Like, I fucking worked hard to become pretty and be able to, like, this hair is $10,000 like a month. Every 6 months I pay $10,000 and every month it's $1,500. Like, that shit costs money.
I know those bills. My wife gets them. I get them.
Yeah, so take care of yourself, be a good person, be genuinely interested in other people, and don't screw anybody over. But you can sell anything, and just learn the emotional intelligence, soft skills, and learn how to manage your emotions, and deal with the childhood trauma, deal with the anger issues, deal with all of that stuff, so you can really elevate yourself and take care of yourself and your family, and ultimately better the world.
Yeah. No, so the last question I have for you is, so let's say, Hannah, in 10 years, what's your goal for your net worth in 10 years, and what, if you're going to break down very simple kind of wide lens steps on how you're going to get there?
Yeah, great question. And I'm on this journey of healing right now because I realize I've been using workaholism as a coping mechanism to not deal with my emotions or feelings for my whole life. So 3 months ago, I said I wanted to be a billionaire.
Yeah.
Now I'm rethinking that as just trying to, I don't know where that really came
Yeah,
from other
yeah.
than just evading my emotions. But realistically, I want to just, instead of being just forcefully driven for money, because money doesn't ultimately bring happiness at all. It's serving others, making an impact that really brings fulfillment for me personally. But I would say, based on where I'm at today, in 10 years, a good goal of mine would be 50 million
Yep.
in net worth. And my whole goal to $1 billion too that I was thinking is start the debt fund, grow the debt fund to $1 billion, 700 million raised, leverage 300,000 in warehouse lines. At that point, it would have about a $200 million valuation that I could sell to a public company. And then at that point, it's just a 10x to $1 billion. That was like my logical thinking, because I always think in terms of 10x. Like I had 0, 10x was 100,000. At 100,000, 10x is a million. Or a million, 10x is 10 million. 10 million, 10x is 100 million.
Yep.
So that's it. But just continue to invest, continue to earn a lot of cash, because no matter how you invest or where you invest, you need cash in order to invest. Like, you're not going to get rich from investing in real estate necessarily, unless real estate's your business and you're doing heavy lifts and value add and all that stuff. But just investing in passive real estate, that's class A stuff that you don't have to manage much, you're not getting rich off that. That's to preserve wealth and taxes. But you need cash coming in, and the best way to have that is you need businesses. So just grow your business, and I want to continue to grow my business and continue to build my brand, so that way I can money goes where attention flows. So continue to grow my brand and funnel those leads into the multiple companies below me. Kind of like the Grant Cardone type model.
Or the Gary Vee model.
Gary
all them.
Vee, all them.
I mean, they did it brilliant. I mean, I was in 2019. Gary wasn't really known at the time. He was speaking at an event in San Diego, and I wasn't really paying attention. Truthfully, I was like busy working, and he said something I've never forgotten. Even in my keynote I did with Tony Robbins, I don't know, maybe a year ago, I brought this up, and it was like the changing point in my life, and it changed everything on every business I ever did. Is I had always, like you, been chasing money, right? Because when you don't come from money, you think that's the reason why you're not happy. It's like, if I had money, it would allow me to do this, it would heal this pain, or whatever it is. And he changed it, and he said, everybody is chasing the wrong thing. Chase the right type of attention, because the right type of attention is now currency. Because you can think Kim Kardashian can literally come out with a random ugly shade of lipstick and she'll sell $100 million of that lipstick, because previous to that, she has garnered attention, and for the most part, what she has garnered attention around has fulfilled itself. Her show has done well. It was engaging. Different products she brings out, they meet the standards of her fans, right? And so I think you're brilliant on that. So getting attention and things, where can people kind of follow you? What's the best way to kind of get in touch with you? Drop all that stuff for everybody.
Yeah, Instagram is where I manage everything, and my links can be found to all of my other social channels. I'm actually just starting to build my social media. I've just been like nose to the grindstone for the past 10 years of my life. But yeah, Instagram at Hannah B. Hammond. Perfect. And if you shoot me a DM, I will respond.
Perfect. Well, I appreciate you coming in. Thanks so much. And guys, make sure to check out her stuff. I'll have all of her stuff in the show notes there. And for those of you guys that have always thought real estate investing is just strictly for that, I recommend, as she rolls out her fund, to give that fund a check out, because I'll tell you right now, I have shifted a lot of my investing to private capital to be able to do that. And a lot of times many of you guys are thinking, well, how do I find the right person? Well, that's what a debt fund is. Yeah. You give them the debt, you make a bunch of money, and they do all the underwriting and make sure you don't get screwed on the deal.
Yeah, and I don't offer this, but if people want me to one-on-one coach them to how to private lend their own money and they don't want to invest it in a fund, if they really want to underwrite and make it a business, I will offer that as just a private coaching.
Yeah, so drop her a DM, and I'll put it in the show notes on it, because I'll tell you, especially if you guys have IRAs, she can probably talk to you about moving that to a self-directed IRA, and there's your money to lend out. Yeah, and you don't need hundreds of thousands. I mean, I've seen people do it with 20 grand.
Yeah, my first loan was 50. Yeah. And properties aren't 20 million in Ohio. Yeah. They're like 40,000. And with the self-directed IRA, you don't have to pay taxes on it. You just keep compounding your wealth. So it's been life-changing for me, and would love to help teach it.
That's awesome. Well, thanks so much for coming on. I appreciate it so much.
Thanks for having me.
Of course.